Hey guys, this is Craig.
And this is Adrian.
And you are listening to Cash Talk.
You can find us on Instagram at @TheAdrianHall, at Financial Fowler, at Cash Talk Podcast, and you can email us at cashtalkpodcast@gmail.com. And now for the stuff that we have to say in every episode so we don't get sued.
Discussions in this show should not be construed as specific recommendations or investment advice. Always consult with your investment professional before making important investment decisions. Registered representative securities offered through Cambridge Investment Research, Inc., a broker-dealer, member FINRA SIPC, investment advisor representative, Cambridge Investment Research Advisors, Inc., a registered investment advisor. Cambridge, Movement Mortgage, and Cash Talk are not affiliated.
Movement Mortgage supports equal housing opportunities. NMLS number 39179. Adrian Hall, NMLS number 1752332. NMLSconsumeraccess.org. All right, thanks. Here's the show.
So, are we recording? I guess we are. Obviously, we got the
Whenever you're ready, buddy.
All right, cool. So, joint bank accounts, finances with a spouse or fiance or girlfriend or boyfriend or whatever it may be, is the topic of discussion today. And first, let's just start out with, if you have a reason to want a joint account with someone, to who you can have a joint account with. There is no, really, you can open a joint account with whoever you want, whenever you want. But really, that may not be a good idea, and it may not be advisable at all. So there are different situations that people find themselves in, whether or not these situations apply to you may or may not be true. But a lot of folks will have joint accounts with their spouses. Some people believe that every account should be joint and everything should be shared, and some other folks disagree and say nothing should be shared. We should, live independently with our finances. How do you live inside that paradigm, Adrian?
I am shifting, to be totally honest. So you're right with you don't have to have a formal relationship to have a joint account. I guess I knew that growing up because I was on an account with my parents and then I kicked them off my account. And me and Jay got an account together and we were just shacking up. We weren't even engaged or anything at that point. No. We got engaged, but that wasn't why we got the joint account. And I'm on a couple of different committees that operate businessy accounts, and we have joint rights on them. So the arrangement can be whatever. But as far as personal finance, originally I was pro joint, and I think I still largely lean that way of it's hard for two people who share common financial goals to grow together if everything's separate. And I've seen instances where the couple, the operating unit, so to speak, they hinder themselves to match the lower person. I've had a client before where two of them were buying a house and I think they were married, engaged, whatever, formal relationship. They're buying a house and they agreed they were going to do the down payment 50-50. And I started seeing throughout the transaction that their good faith deposit, they were splitting 50-50, which was $500. And the appraisal, they were splitting 50-50. And then when it came time to actually buy the house, he had way more than 50%. He had the whole down payment times 3. And she did not. So she didn't even have her 50%. And they ended up switching to some other product to not do any type of down payment, which was actually worse for them financially. So I kind of feel that was one of those times where I just kind of sat there and scratched my head and I was why'd y'all do that? So it has some negatives because you're only as strong as your weakest person. But at the same time, if you can collectively pull your resources together, if you can take the strengths of everybody, then the foundation is just stronger. So I kind of go back and forth because then on one side, I have to be aware of the fact that younger people are getting married older in life. So the formalities aren't always there. And there's a lot of things that almost open up ripple effects when you get a joint account. You get a joint bank account and suddenly all your paychecks are mixed together. And your paycheck's your power, especially when you don't have much else. Like that is everything. And then it's not far before suddenly you're co-signing on each other's cars and you're buying houses together. And then you break up and you have to unwind all of those things. So I see the pros and I see the cons, and largely I stand on the you're stronger together. And if you're dividing your house, then you're only going to be as strong as the weaker half. But at the same side, I'm also kind of a like, protect yourself and keep everybody safe. There's nothing wrong with spelling out the rules and regulations of your relationship so that you have less to fight about and there's less power struggles, you know? So that's kind of where I am. Where are you?
Yeah, great question. So I have never had a joint bank account with anyone in my lifetime. Now, I just recently have been engaged, so that will most likely change when Chelsea and I get married. But so that is the first part of my answer. So I've never had much personal experience with having a joint bank account with someone and the issues that come along with that, or maybe the benefits that come along with that. But I do deal with this all the time in my work with people doing financial planning. And, you know, the one thing I want to touch on that you were talking about is a situation where one of the parties in question is very, very strictly adhering to, we have to keep everything separate and we have to be 50-50 on everything. And I'm referring to the example you gave with the mortgage borrowers that were splitting the appraisal costs and the down payment and everything else to their own detriment. So in a situation like that, in a financial planning engagement, you usually start to uncover why that may be a thing. And usually it comes down to some experience a person has had in a previous relationship, or it could be the experience of watching their parents manage money, whether it be poorly or successfully, and what they've taken away from that as they grew up. So there's a lot of kind of, it's data, but it's not, quantitative, it's qualitative data. And it just is, how do you think about money, and how does your spouse think about money, or your significant others think about money, and why? And that is a conversation I have with people a lot when we're trying to decide, does it make sense to have joint bank accounts yet?
Mm-hmm.
Because your thought patterns have to shift and align when you start thinking about having joint bank accounts. So I would say that I think that my goal for my own situation is to work through a process of aligning my financial goals and my financial priorities and my own feelings about money with those of my significant other. And part of that will be me putting some effort into understanding her view of money and where that comes from, and understanding some of the experience she's had in other relationships with joint bank accounts and things in the past. One of the things that she'll know about me is that I have never done that with anyone before, never had a joint bank account with anyone before. And that's because I'm fairly risk averse and I hold things pretty close to the chest. So I will be nervous about having joint bank accounts at first.
Yeah.
That's one thing that she'll know about me. And it's something that it's my responsibility to communicate that to her, but it's also my responsibility to, put some effort into trust and, merging our lives. So that's kind of my take on it. And I don't think there's ever a right or wrong answer per se, but I do think that there's a conversation that needs to be had to decide if it's something that may be a good fit for your own situation.
I think it's also it's a prideful conversation. And it's one of those things, like, first off, money is a topic where there's a lot of pride and a lot of shame at the exact same time all around it. Like, you're proud because you work hard and you got this, but you're shameful because you feel like you don't ever have it, you know? And I feel like a lot of times that is a root that also, it's like you have that same conversation of money that you have in relationships where you're prideful of your partner, your significant other, whoever you're with, like you feel good about it. But you also have the shame of like, but what if we don't work? Or I know I've always been more transparent. Honestly, sometimes to my benefit, sometimes to my detriment, but like I'll tell you everything that's going on and not think twice. But there's a lot of couples that don't do that. And so joining finances means those little things show themselves. The fact that maybe you've got more debt than you admit, or that you go have a couple more beers than you suggest that you do. And I think that, like, on one hand, those are conversations you should have. Like, if you're at a point where you're shacking up with somebody and you're willing to merge money, you should be talking about that stuff. And I don't yield on that one. But that doesn't make it any easier. That doesn't make it any more palatable. That doesn't make it any more prosperous or beneficial. And risk aversion, you mentioned, which you may feel what I felt. Keeping in mind, let me just disclose, personal finance is personal. Everybody's situation is different. I've been together, we're almost about to begin year 11, and you all are very early in your relationship. So when Jay and I first merged accounts, I was very hesitant. Like, I was ridiculously hesitant because I had, by that point, lived on my own, had an apartment, paid rent, paid bills, lost the apartment, went back to my parents' house, and then got back out again with Jay. And so I had some financial whereabout that he didn't, because he'd never done those things that I had. So when I got out the second time, I was very intentional, which he knew, of separate accounts for now, because we were still new. And we want to make sure we can pay rent on one person's pay alone. We want to make sure that we can pay our lives on one person's pay alone, because, like, let's be real, not even talk about the financial literacy piece. But if we broke up, because it'd been like 6 months, 7 months, whatever time frame it was, if we broke up, you don't want to get stuck in this weird, awkward roommate situation. You want it to be a clean break. And you can do that by being like, all right, I got the bills, you pack your bags and go. And so when we started to formalize our relationship, joint accounts came up. And I was hesitant because up until that point, he had been paying me his half of everything and just trusting me to pay the bills myself, versus what some couples would do where, like, if the rent's $500, or I guess let's be more realistic, that's what it was 10 years ago. If it's $1,000 or more, you bring 500, they bring 500 to get a cashier's check or something. You can do that. We did the same arrangement where he just gave me the money. And whenever he first joined accounts with me, I made sure to stress to him, now, FYI, there's going to be more money in here. You're used to having a couple hundred at any given moment. You're going to see thousands sitting in this checking account. That thousands is your rent payment. That is your utilities. That is your car payment. That's your car insurance. That's your Netflix. That's everything we got going on. So don't, like, see this and relax your belt and then suddenly think we can start blowing money. We can't, because that money is allotted. And when I realized that was my fear, was that I didn't trust him in that regard, because he would very much at the time go to, like, Walmart or Target and buy those $5 DVDs, because that was a thing back then, or buy stuff in the checkout aisle. He was more impulsive than me, but I'd do the exact reverse, and I'd make larger purchases, not think twice about it. Anyway, when I got over that and we grew as a couple, that was the thing I was having a hurdle about. And then we grew from that moment, and years went by, bought houses, bought cars, investment property, started saving for our retirement. Our finances matured with our relationship. So here we are 10 years in, and I'm noticing a unique situation that I didn't anticipate beforehand. And I say this story because if you don't know where you are on the joint versus separate, maybe it'll give you a two-sided coin view. Originally, I was 100% pro, like join everything, pull your resources together, you're stronger together, stand by your man, or whatever that song is, Tammy Wynette, all that stuff. And then here I am now, and I'm like, our life has evolved so far to where black and white, I have the privilege of having a decent income, more than I ever thought I was going to. And I don't squander that because it feels like it can go away in any given moment. But we're using my income to do our short-term savings, to do any type of short-term investments, to fund our living from day to day. I pay all the bills. I pay the mortgage, the utilities. I pay all that stuff. And his is going to two things, his truck and his 401k. And that's his contribution. And they're valid contributions. But me being self-aware, me being somebody that had been in an abusive relationship before, me being somebody that had been evicted before, I worry constantly that we're accidentally entering a pattern of power struggle where I have so much financial leverage over him. Like we reached a point that everything's joint, but let's be real, only one of us controls the money, and that's me. He has input, he has veto power, he has the logins to everything. He can walk in, withdraw whatever he wants, but he doesn't. So I have all the power. And sometimes I'm like, if we had divided earlier, or maybe instead of having just one big pool, if we had two separate accounts for our spending and then one for the joint bills and stuff, maybe finance would be a little bit different. Or I see it with birthdays and holidays and stuff. It's real hard to sneak a gift by somebody when they can just look into transaction history and see what's going on. So I have a bad habit in like December of not even looking at our credit card statement and our debit card statements for the whole month because I don't know what's fraudulent and what's not. And I don't want to accidentally see like a very specific store where I know it's a gift for me and then you ruin the surprise. So I'm evolving, but I think truthfully, I don't know. It's one of those things where there's no right or wrong answers because it's such a 50-50 conversation. So many couples have joint accounts and so many couples don't, but you have to do whatever is best for you. And you figure that out by talking to your significant other to begin with and saying, hey, so what's your hangups? What's your goals? Let's put it out there and see where we want to go next. So that's kind of my feeling on it. I don't know.
Right. I think you just made the case for a hybrid, some sort of hybrid setup. And this is the way I see that. And I've helped people design this before. And I'll probably do something similar for myself, from Chelsea and I. And that is have a joint account where you have direct deposits from, your pay income, where all of your shared expenses will be housed. So household expenses, groceries, insurance, et cetera. And then you have an automatic transfer set up monthly, 2 transfers going to an individual account for each partner. And the amount in that transfer is an amount that you've agreed on and budgeted for. That is your personal discretionary spending for the month. Because let's be real, everybody deserves to have some discretionary powers over their spending, even if they're not the breadwinners in a relationship. So this is a good way to easily give flexibility to each individual party in their own personal savings and their own discretionary spending. Because as you go a few months, maybe you have some really low discretionary spending months and you have some money build up in your discretionary spending checking account. And that's, some personal savings you have outside of your joint finances. So I think that is a good way to have a hybrid setup. And then you can even take it a step further and have a joint savings account and then also have individual savings accounts where You can set up transfers that happen automatically that fund like individual emergency funds or individual taxable savings.
So I got a question, because you said I made the case for a hybrid account, and then you made me think. So one's a statement, one's a question. Venmo. It's a low key, like, dirty pleasure of mine. I love to get on there and look on that app and see everybody transferring their money across like state lines all the time, and seeing like so and so went out to happy hour and paid them back, and so paid them for dog grooming. Like that's my jam. And I see often couples that like split everything 50-50, and you'll see like on the little memo for their transfer, because like, I don't know, everybody loves to overshare, and you can just see it out there. I see like, okay, they're splitting their power bill in half. They're splitting their electricity in half. They're splitting the rent in half. Okay, they went out to dinner and they are splitting it back. Like, one person swiped their debit card and the other person Venmoed the money back. And that feels messy to me, but I'm sure there's a smarter way. I don't want to condense it down to this like 30-second soundbite. But you mentioned joint savings account. What about in a situation like me, or even in that situation with that one person who was buying the house and they collectively had to yield to the lower saver? I can, due to the nature of how my money be set up, I can outsave Jay, period. And so I don't like, I worry, because I'm aware of that, because I was in an abusive relationship. I'm aware of accidentally getting leverage over somebody else. What if your significant other once a month can manage to save $100, and that's good, and it's $100, killer, $1,200 a year, but you have the ability to save $300 a month. So every $1 they save, you're saving $3. Like, is that collectively working towards the same goal? Do you ratchet yourself down so that you aren't over saving them? Like, how do you approach the equality in that part? How would you view that?
Yeah, great question. So this is the way that I'm going to approach it in my own life, and maybe that can kind of give you an answer. So Chelsea and I are going to be trying to start a family and have children together pretty quickly after we get married. And we both are the type of people that talk and plan and, talk about our goals and things like that a lot. And, one of the things that we've decided is that we would both like her to be a stay-at-home mom when we start having kids. And so we've talked about this specifically. And that is, okay, so when she's not earning an active income, how do we look at that savings issue? And one thing that I'm going to commit to do is make saving contributions for her that are designated as her savings. And that's just part of the financial plan that I'm putting together for us. And I recommend that in a lot of cases where there's maybe not a stay-at-home parent or something like that, but an inequitable income situation, I think it makes sense to talk about what savings goals should be as a household per person, and make that based on an outcome that you're shooting for and based on the household resources that you have, including your income. And do not hold yourself back because you're worried about getting further ahead than your partner. Just make the extra contributions for your partner to elevate them to your level.
Okay,
Now,
I think that's smart.
That there's a lot of trust that has to be involved there. That's not something that's easy. It's not an easy conversation, and I think it's there's a lot of things to consider before getting to that point. One of them being debt. So
I was just about to say that. My man, go ahead.
So if there's an inequitable situation with debt coming into a relationship, or when it's getting serious enough for the finances to be merged, if you're in a situation where the higher income earner wants to bring their significant other, elevate them to their level and help them progress with their savings and everything else, I think it is important to focus on the debt piece first. And that, I think, is a conversation that should be had well in advance of this joint savings, joint finances conversation. I think that when you're getting into a relationship and it's becoming, serious to a certain degree, and you're thinking about, the viability of making this a long-term thing, a real partnership, I think debt is something that you have to talk about pretty early on, because that is it really shows a lot about the willingness of someone to open up about the uncomfortable parts of their finances. Mm-hmm. And really, you never want to be blindsided by someone else's debt, and you want to be aware of the situation before you get to this conversation of having joint bank accounts. Because if you're already aware of the situation, then you can come at this issue from a place of, okay, how can we rectify the situation together and be better for it? Instead of, oh man, why did you hide all this debt from me? Now I'm like second guessing everything, because that really throws a wrench into everything. So wow. I think the big point I'm trying to make is you just have to be open and honest and communicative with your partner and ask difficult questions early on, especially if you think that it's going the direction of merging finances. Be on the same page about this stuff. So,
that is key.
For example,
go ahead.
No, you're good. I was just going to say, for example, Chelsea and I had talked about all this stuff, before we'd even started talking about the possibility of, getting engaged or getting married or having kids or, any of that stuff. So that's what I just recommend to everybody, is just to have those conversations early.
Mm-hmm. No, you need to know your boo's credit score. Like, that's what's up. You made me have a light bulb, and then I got a point after that. So light bulb moment. I've referred to income. We referred to income a few times throughout this episode, but it's not always an income conversation. Sometimes it's a debt conversation. Maybe the other person earns more money, or earns the same amount of money, but they can't contribute as much because they have larger obligations. And when I first got with Jay, that was me. He had no debt, zero debt, nothing. He owed a cell phone bill that was like $100 a month. That was all his obligations were. And the car we drove around in was already double what his obligation was. Like, I had a car payment. I had a credit card at that point. I had a student loan at that point. I had car insurance. Like, my expenses to his 100, I was in like the 500 or 600 area. And as we built, I usually stayed ahead of him on debt until we started getting equal on everything. But when we first joined accounts, that was that conversation that we had, because I was like, hey, look, about the car payment, obviously. Like, it's obvious the car's right there. It's not paid off. We got that. Car insurance comes with it. No surprises. We'd bought another car by that point because he didn't have one. So that was a transparent piece. But something he didn't know much about was when we had first got together, I was coming out of a bad situation. I was really broke. And I borrowed thousands of dollars from my parents because I had the benefit where my father had co-signed on my car loan when I was 19 years old. And when I reached the point I couldn't pay for it anymore, he wasn't going to let his credit go into the toilet because I couldn't pay. So he picked up the car payments, and he picked up the car insurance, because you have to have car insurance when your car is financed. And that was $100 a month, hundreds of dollars a month for a couple of years. So I came in owing my parents thousands of dollars. And I'm like, just so you know, on top of the debt we know about, that's an obligation. I got to pay them back. And we did. We did. It was shortly after we bought the house that I think we owed about $900 left. And my parents had seen that we'd made on time payments for like 2 or 3 years by that point. And they just said, don't worry about it. You bought a house. You've done right. You're good. But we paid them the larger part of $2,000 back. And that's part of that conversation where if I didn't tell him up front, then he would have found out after the fact when thousands of dollars slowly goes missing month by month by month. And then that's a worse conversation. You let it get bigger than it needs to be. One comment I'll make on, it's a pro and a con, but it's a banking system versus joint account situation. So something that you may not always know. One is payable on death situations. If you have a joint account with somebody and one of you passes away, despite the will, despite all these things, the money automatically, boom, transfers to the surviving person on that account. That's just how it is. Unless you set up a payable on death where you say, okay, when I die, the proceeds of this account, X amount go here, X amount go there, and you write that with your financial institution and they'll honor that because they play games. So if you don't have that kind of setup in mind, keep that in mind. So if let's say you're a little bit more advanced in life and you have children, but you're joined on an account with somebody you've been dating 2 years. But if you pass away, you want your savings to go to your kids. If you don't spell that out, it automatically goes to the other person. But a reality point too is, and this is the thing I was curious about when I first got a joint account, is how do you get off the joint account? And something to think about is like, let's say, Craig, your account, and you add Chelsea to your account. Chelsea can remove herself, but you as the primary account holder cannot kick her off. She has to remove herself. So if you are leading the way and you reach this point of, and you all go separate ways, she has to be willing to remove herself. So that's something to keep in mind. Also, to the reverse, if you join your money with somebody and you reach that point, like I always try to say, don't marry somebody that you're not willing to divorce, because people get real vindictive. And next thing you know, you're in divorce court fighting over plants and like dogs and stuff and missing the greater picture. Keep that in mind, because I have heard stories of people who, when they're processing going separate ways, it's implied this money's mine, that money's yours. But then when you get into a desperate moment where now you're floating your own house for the first time in a few years and your own bills for the first time, it's tempting to like just dip into that coin, and legally they can. And I've seen it happen time and time again. I'm not saying you shouldn't do it, because I still do yield towards joint is important, but you need to know the other person on the other side and watch the warning signs as I won't say warning signs, watch the reality as your relationship evolves, good and bad, and be willing to stop and push the pause button and talk about it again, because you have to grow more than just on the calendar. You have to grow in every avenue when you're with somebody, especially financially.
Right. Yeah, I think that's really valid. And I think the only other thing that I'll add is that you are right with how the accounts are titled. You have to pay attention to that in the case that someone passes away or something like that. Technically, in a joint account, if it's just registered as a joint account and that's it, and someone passes away, that joint account will be tied up in probate because it wasn't set up as a joint with rights of survivorship account. It wasn't set up that way to begin with. So you do have to be careful about how things are titled. And keep in mind that the only types of accounts that pass via beneficiary designation instead of going through your estate are qualified retirement accounts, which are only individual accounts. Now, on taxable accounts, you can register as transfer on death. So that's a way of getting around probate. You can set up a joint TOD account or a joint with rights of survivorship account. There's different ways to set up joint accounts to do what you want them to do in the event someone passes away. But just make sure you're talking to someone at your financial institution or your financial advisor about how those should be titled so that they do what you want them to do in the event that happens.
Yeah. Exactly. And keeping in mind when you go to your bank or credit union, like they're just employees. They're going to fulfill requests to the best of their ability. So you have to know walking in what you want and know when to stop and ask these questions. Because if you don't ask, you may not receive. What you said is 100% I agree with.
Right. So, anyways, I think that we've covered a lot of really good stuff. Is there anything that we need to cover that we may have forgotten about or anything like that?
No, I think pretty straightforward. Overall summary is talk with your boo, determine where you want to go, and act accordingly. Protect yourself, protect each other, but it starts by having the conversation and getting on the same page. I think that's the overall summary of this conversation today.
Right. And, the biggest piece of encouragement I can give to people is, instead of thinking about things in a negative light, about, holding yourself back so you're not getting too far ahead of your partner, maybe try to flip it a little bit and think about empowering your partner and elevating them to the level that, they can be, and working as a team. I think that that really is empowering for people, and it gives everybody buy-in. So I just encourage everyone to be, transparent about their finances with their significant others, and work together to benefit themselves. Benefit yourselves as a household. And I think you'd be surprised about what kind of good things can happen when you do that and work as a team.
Yeah, exactly.